Okay, so this session is a bit of a teaching one, so I'm going to go over why I was expecting Euro to expand, whichever direction, right? I had my bullish bias and I've explained that, but so I said first from before. Okay, let's just start off with the beginning. Why the bullish bias? Okay, let's come down in here. We're expecting support, so that's understood. Then yesterday, what did I have marked out? I had the range marked out. Okay, so the range we were in at the time was this low and this high. Okay, so I said if it got back within the range, right, then what is most likely, we're going to go to the other side of the range, and as you can see today, that's happened. Now, why was I expecting an expansion? Okay, so let's go to the daily. Now focus on the bodies of the candles. Okay, it's Thursday. What am I getting the days wrong? It's Thursday today, Monday, Tuesday, Wednesday. Look at the bodies. Small bodied candles. Okay, small bodied candles. Can you guys see that? Maybe if I did this, got another chart up. Let me get another Euro USD chart up. You'll see it clearer. So Euro USD. This is why I use the wicks. No wicks. Where are you? Okay. Small bodied candles lead to what? Big bodied candles. Okay. The volume is within the bodies of the candle. That's when the trading is. Okay. So the wicks are just deviation. The way I see it anyway, deviations, and it works for me. So that's how I'm going to explain it. So then the lower time frame for me is used to time it. When are we most likely to expect it to happen, and how do you anticipate it? Okay, you know, someone was asking me earlier, you know, I'm getting chopped up in ranges. I go, yes, we are in a range, but what do you wait for? You wait for the little market structure shifts and breakouts to anticipate it. So separate out the days. Okay, obviously low range day, and Tuesday it came back below. Everybody and their dog is getting short this market. Then it comes back within the range. What does that mean? Keep the bigger picture in mind. We marked out the higher time frame level. This reaction of it has short proof to it. That's one aspect of it. It's the higher time frame we're pivoting off of. The dollar index was at resistance. Quickly go to the dollar index quickly. Weekly resistance this is. Go to the weekly chart. Right, that's weekly resistance there. We took out the highs, rejected, came back down. There was no follow through. Okay. Also looking at the other majors, they were looking bullish as well against the dollar. Now, so we wait. Here it's another consolidation. So let's mark out, this is when we bring in the weekly open. Now pay attention to what I'm doing. I am bringing in every little thing, concept I use together now. Not just focusing on one concept, but bringing everything over. What have I done so far? I've brought in a high time frame level. I've brought in a range. I brought in using the dollar. And now I'm going to bring in what? The weekly open. Okay, so far are you guys understanding how I'm bringing everything together now? Not just one little concept, but you gotta use it you gotta know how to use them together. Okay, so we'll do this as slow as possible. 1.16143. Now at this point I'll ask you if everything's clear, because I don't want to keep going over this. I want everybody to be on board this. Okay, let's do this in a different color so it stands out. Weekly open. Okay, weekly open. So let's get rid of this now. Just label it my chart. Weekly open. So what do we have? You see here, I'm gonna have to bring this back in. Resistance again, come down, everybody's bearish, boom, back above. Now remember the range, so then I mark this out as a deviation. Okay, for me this is seen as a deviation. Then back within the range. Once we're back within the range, use that previous level as support. Then we meander around. At which point is the breakout ready? Okay, for me it was what? This movement out. This was the first time we moved above the weekly open, and look at this, it's an impulse move, right? Now this is where, if you've got the higher time frame storyline in mind, you're remembering what's happened We broke out of the range here. Go back. Then back within the range. Our bias is what? Bullish. Okay. So in this case, you do not see this as a fake out. You see this as the buyers have stepped in now. It's clear. We've broken above the weekly open. Any dip back down is fast move. A lot of people say, well, that's a breakout of these highs. Oh, look, we got back within the range. A lot of people are shorting this, trying to play for the heads and shoulders play. They're all getting fucked right now. So the head and shoulders, that is on the daily. So I believe they all will get fucked. So we use what? This down move here that led to the impulse move. Now if I mark out this, wait, let me just clear something. Yeah, well, anyways, okay. If we look at this, it's come down to what, 50% of it? Yes, it's popped down a bit further, that's fine. But see how it's gone back above it. So this was the initial buy here. I pointed this out during London Open. Do you guys remember? Took out the stops. Okay. Into this order block, down candle to move up, rallied away. This told me that we're ready now. Any dip back down was to buy the long for the big next move up. So we've come back down, retraced back into 50%, consolidated here, and this is where I went long again, and I played it up. Now, the first resistance point, if you go back on the chart, look at this consolidation here. This move up that took out these stops, what led to that? What caused it? These down candles here led to the move up. We haven't had a move back into it yet. Now let's draw this across, right? So this is acting as a pivot. You can call it breaker, whatever. I'm just calling it pivot for now. It's just easy for me to explain it, and it's just one word instead of breaker, pivot, whatever you want to call it, block. It's easy. Just call it. I'm calling it pivot because it's just where price is reacting off of. Either way, it's a support and resistance. Okay. So here's resistance. It comes back down. Now we're above the weekly open, so this is the wick. We're now in the body phase of the candle, so we're expecting an expansion. It's in sync with our higher time frame bias because of what I've explained so far. Is everyone in sync so far? Anyone getting confused? Is everyone clear? Okay, so the dips are used for buying. Now, what would increase our probability if this was broken? We've broken this now. Okay, we've broken this now. So resistance levels or zones or breakers are getting broken, and it's clear where it wants to go now, to this high here next. So what I would wait for is, okay, if this was being used as a resistance, if resistance is broken, what do you expect? That to become support next, don't we? So the way I will use this is I'll wait for a rally up, then come down. Now I wanted to prove to me it's gonna hold. How does that come in the form of a higher high? That proves to me the buyers are in. Now then I wait for the dip. I know where my risk is below this level, okay, below this box, but depending on what structure I get here, I may be able to have a tighter risk. Then I will buy it up to there, well, target 1, and then I'll be targeting, well, higher time frame around here, and then you know the score. But is everyone clear with me how I was building up my bias and how I'm playing this and what led me to believe the breakout was going to happen? First of all, we had the small ranges in the daily bodies, okay, the daily candle bodies, small ranges. Then we had this move above the weekly open. We've got this breakdown. We're already expecting a movement back with it deeper within the other side of the range. Then this move here, big impulse move here. Now we're ready. This is telling me the buyers are in now to move the market. Any dip is going to be a buy. Is everybody clear with that? Okay, now let's go to another example. Okay, go to another example. If you're not familiar with this, then go over it a couple of times and then your charts will answer your questions for you. Dollar CAD, why did I think this was a short? Okay, so how did I actually, I'm going to use this example as how I compounded positions. Okay, a lot of people ask me, how do I compound? This is how I compound. Okay, so we've already established, you know, we're into a key high time frame level. Okay, go to the 4 hour and we're breaking down. Now I missed this, which is fine. Okay, and I didn't get on board the high. What I waited for is, okay, let it prove to me the high is in. We took out these highs here, fill this gap in into resistance, okay, breaking down. So where they were buying on the left hand side of the chart, so then if this is the high, I'll split the chart, okay. So I'll see where were they buying in this move up, because most likely they'll be using those same levels to what? Sell. Support and resistance again. So it's the down candles they were buying it. So let's start off here. This consolidation here, this down move led to the move up. When it breaks, what do you expect? A retest. Now I've shown this live anyway on my Twitter, so you can see me step by step marking out these blue levels and taking it in front of you guys. So there, you can either short it there, or you wait for what? What I waited. So rip up. I'm not confident. Okay, that's fine. If you're gonna short it, then you want to keep your stop loss there. Then breakdown. What's this? Not stop rate, but a breaking market structure. Bigger picture. We want to see breakdown. Expecting breakdown. If we're getting breakdown, then this is a breaking market structure. Then any retracement is a what? A selling opportunity. So you can sell there. So you've seen me put positions on there. Now, where was the next one? Well, we've got this consolidation here, and we've got this consolidation here. Okay, now why am I more interested in this one rather than that one? Well, this one is used for support here, it's used for support here, it's used for support here. So this one's more important to me. This will take practice, okay, to see. Only experience and practice will help you refine down which one to use and which one not to use. I can't teach you in one lesson. You're gonna have to go back, practice it, and then only with practice and experience will you know. Okay, I'll give you the basics, you do the rest. We can see it's acting on resistance there. Sell off. What did I do? I sold it there. Where was my risk? There's my risk, but I did not want it to come above what? 50% of this. Okay, so with experience you'll know where to put a stop loss. I personally put my stop loss above here. Then it's come down. That's when so from my initial position here and my stop losses were above around here, I was able to bring my stop losses down to what? Just above this box here. So this position is protected now, isn't it? So now I can enter the market. So you think, where would I enter next? Ignore that you're in a position, okay? Where would I sell next? My bias is what? First target stops are going to be resting here. Where would I enter next? So I'll enter there. Where's my stop loss? There. Are you able to enter with a full risk position? Yes, you are. Because why? The initial positions are risk-free or reduced risk. Is that clear? So this is when you're able to compound now, aren't you? You know where your new invalidation level is. Initially, your invalidation level is above this box. When this breaks, where's your new invalidation level? Above this box here. Because if we're correct, then previous support should hold as resistance. So we shouldn't go above this box now, should we? So my stop losses can be trailed to there. Everyone clear with that? Okay, so where's the next consolidation? See this 5 minute here? Draw that out. So now I'm gonna get rid of this because it's gonna get messy otherwise. So we know, yeah. Oh my god, why is he doing this? Okay. So this should be holding as resistance, okay? Is it? So once we've broken it, is it holding resistance? Resistance goes a bit deep, but the wick is below 50%. Resistance. So where's my stop loss trail down to? Down here. Now that I've reduced the risk on those two positions, can I enter another position now? Keeping my risk small. Yes, I can. Because why? I'm reducing my risk. I'm not keeping the same stop loss. I'm reducing the risk. So this is an opportunity to even enter in Asia. Okay, you want to wait? That's fine. We can wait. We get this breakdown, breaking market structure. So where's my risk? So what I did was then, hang on a minute. Just got a text message. 1 second. I used, okay, we can see the move in Asia here, right? This is when you bring in blocks and breakers. What's that, Trader Mike? That strategy? That strategy isn't working well. So you got this down move that led to the move up that took out these stops. So I said, okay, this is why I marked out. If you look back on my Twitter feed, I said I want this blue. At the time, I'm using the different platform I used. It was a blue box. Go back. Do you remember when I said I want this blue box to hold? So this is more intraday now. So I mark out 50% of this blue box, because if it's going to go above 50% of it, then it's most likely wrong. Okay. When I seen this reaction and closed, I entered a short here. What have we done? We've come up, took our intraday stops into that key level. It's also what? A H1 order block as well. So where am I able to trail my stop losses? So I trail my stop losses from those stop losses there. Where could I trail them up to? Above this box now, or above this swing high, whatever you're comfortable with, okay? But either way, we've reduced our risk even more now, haven't we? And we've added another position. So can you see how I'm able to compound and add more positions? So as soon as we got back below here, so I'm using fib targets now. This was the low to the Asia high of day. So I drew my fibs, 200% extension. As soon as it started reacting, I closed my position, and I showed that, okay? I closed everything down. Now I did not even have to catch a whole swing move, even though I think it's going lower. The amount of positions I had on, and I was able to compound. So can you see how when you've got strong conviction of where the market should go to, right? This is the target short term, and you're able to reduce your risk, as I've explained. Can you see how instead of having just one position on, you can reduce your risk, add another, reduce your risk, add another, because as markets unfolding and breaking those support levels, your invalidation levels are becoming lower and lower and lower, and this is how you can trail your stop loss or add positions. Okay, is everybody clear with that? Okay, so that explains how. Now personally, I think we're gonna go to here. Yeah, so where's the next level? So if you look now, this down move, so if I mark this out, was acting as support here, broken down. Yeah, so that explains. If I go any further, it's going to cause confusion, but that was the main play. So what you can do, use these examples, go back in your charts, don't take my word for it, go back in your charts, find examples like this and see how you can work it. Okay, so I'm just going to stop the recording here.